In this video, I'll be breaking down the different types of correction when it comes to the easy money concept that we use to trade. So right now we're on the daily time frame of the S&P 500. I did take this trade 2 weeks ago, but I lost, and that was because the correction wasn't finished before it formed its new impulse. So as you can see right here, we have two different types of correction. On this structure, we had a higher high followed by a correction, a higher high breaking structure followed by a correction. But as you can see right here, there's still plenty of space for this correction to continue to the downside before creating its new impulse to the upside. Compare it to this one. We have the structure of a higher high, higher low, higher high, breaking previous structure, followed by a correction. But you can see there's very little space for this to continue its correction. This is a very deep correction compared to this small correction. This still has a lot of space to complete its correction. So price, if we was to draw our Fibonacci on this correction, price can still break the 61 level, which will be a valid setup for us, but it could also just fake out and then continue its correction deeper and then form the right impulse. On this side, you can see this is a very deep correction. So price will more than likely, if it breaks the 61 level, just continue to go higher, and there's no need for it to just break the 61 and then go lower for another correction, because this correction is already very deep. So now I'm going to show you how I got stopped out and price just went further with the correction before actually breaking the 61 and going to TP. So as usual, we always start on the daily time frame. You see, we have a impulse to the upside. Impulse is all one color. Breaking previous structure, the highest point was this week, closing above, and the retracement is also two daily candles of the same color. Then we go to the weekly time frame. On the weekly time frame, we will be looking for an area that could be of influence. So as of now, I didn't have any significant areas that will play a large role in my price movement or in the trade that I'm looking to take. Only thing you can see right here is that price was just continuing its structure higher, forming higher lows, higher highs. We have this big bullish engulfing candle breaking previous structure for the continuation to the upside. So let's go back down to the daily time frame. On the daily time frame, we will draw our Fibonacci in the opposite direction of the correction. This we do to measure the distance of the new impulse. Then we go to the 4 hour. On the 4 hour, we will be looking for price to break the 61 level as usual. Break the 61 level followed by a retest and then a continuation to the negative 27, because that will be our TP. So right now we are just waiting for this one to break the 61 level. I'll play it out. You can see price gave us a clean break. So right now we just put our limit level on the 61. Let's put it on there. Our stop loss, as usual, always go on the 88, or in some cases, it will go below the 88, so below the 100. So in this case, I put my stop loss on the 88, TP at the negative 27, and you can see there's a minimum of a 1 to 3. So right now, we are tapped into the trade and we have officially entered it. Let's play it out some more. As you can see right here, price tapped us into the trade, but it ended up going lower and lower and lower. That means there was still more room for the correction to take place, as I explained previously. So that's no big deal. Obviously, we have great risk management, so one loss doesn't affect our account very much. In this case, we go back to the daily time frame, and as you can see right here, let's remove this candle. When we were looking at it on the daily time frame, it only had 2 daily retracement candles. But as you can see, this third one also came about because the correction wanted to go lower before creating the new impulse to the upside. So right now, we're just chilling, go back to the 4 hour, and on the 4 hour, we'll be waiting until price breaks the 61 level again, so we can enter and then ride it to the negative 27. So let's play it out. As you can see right here, price broke above the 61. We will put our buy limit order on here, TP at the negative 27, and our stop loss at the 88 level. Now, as you can see, price almost came back to our stop loss and hitting it. This is why I always preach don't babysit your trade, because if you already got stopped out by this candle and you see your second entry, a retracement candle of this magnitude, you will more than likely get scared and just close it because it's almost at your stop loss. But that's why I say don't babysit your trade. Just set your alerts, set your stop loss and your TP, and go enjoy your day. Right here we see a big engulfing candle, bullish engulfing candle, breaking the 38, and that's our indication to put our stop loss to break even, and we can now enjoy a risk-free trade. Let's play it out. And as you can see right here, price hit TP. After previously stopping us out, we would enter again. I didn't enter again, but you could enter again and ride it all the way to TP. And this was the 1 to 3. So what I explained previously when I said the retracement wasn't done, there was still more room for the retracement. We still are going to take those trades. You just have to practice great risk management. Sometimes it will end up in a loss, and sometimes it will end up in a win. If you want to go for like perfect setups, you will more than likely just wait for the retracement to get very deep, and then you will consider it as a setup. One key tool I use to measure the retracement is the Fibonacci. So I will draw it from the beginning of the impulse to the end of the impulse. And if the price retraces to at least the 38 level, I will consider this as a great retracement. So if price don't retrace to at least the 38 level, I could consider it as a risky trade because there wasn't a significant amount of drawback or pullback after the impulse. If I put it on the first retracement, you can see right here, 1 minute, yes. You can see right here, the price did not retrace to the 38 level. Price did not retrace to the 38 level. So this would be for me a risky setup. And as you can see with the next one, price retraced to the 38. So this would be, in my eyes, a perfect setup. And we will still take both. You just have to practice great risk management and you will be fine in the end. So this is my breakdown. I hope y'all enjoyed it. I will see y'all in future breakdowns. Appreciate y'all.